Ahoy there, traders. Thank you for your patience. I was just a moment or two trying to frantically scramble behind the scenes, trying to get Zoom to work. But no, nonetheless, we're all here. How are you doing? What have you been up to this week? Has it been good? Has it been bad? Has it been indifferent? What stocks are you looking at? What's going on? Pop a comment in the chat box. Let me know what stocks you've been looking at. Good morning, Glenn. Hello, Randall. Adrian, Al, Bal. Gira, I think I'm pronouncing that right. Hopefully I am. Jeffrey, Perry, Rodrigo, Steve, Scott, Vito, Zach, and Zeke. Awesome. The whole gang here. Right, let's not delay any further. Let's dive right in. So welcome. If this is the first time that you're here, see there's one or two fresh names logging in as always. Thank you very much for your time and attention. The way these sessions go, we're going to spend about an hour talking about the markets. We're going to spend just 2 minutes introducing myself to those who are new, and then we'll get straight into the charts this week. We're going to look at the stock market overview, going to take a look at some charts, and generally just look at what I refer to as production line trading. I refer to it as that rather, because I can always try to make it a production line. It's a rule-based system, and basically just want to push the trades along that production line to the point where I can click send on my order. So that's the way I like to view it. Excuse me. Best way to get the most out of these sessions is interact. Like, comment, share, ask questions. If you're watching this on the replay, pop a comment and I will get to it when I see it. If you're live today, I've got the comment box on my other monitor, so if it's relevant at the moment, I will answer it at that moment. Again, if you've got a question, pop a comment. So who is me? Who's this weird guy on the other side of the microphone? I'm just a regular guy first and foremost. I'm very fortunate to have found a measure of success doing this. I've been doing this now for 28 years, been full-time since 2000 at trading. So what's that? 22 years full-time. Cool. It has allowed me a luxury being able to do whatever I want to do, whenever I want to do it. I like cake, coffee. I like a good book, occasionally the bad book. I like long walks and strangely flamingos. I spend a lot of time outdoors doing stuff because there is zero need to be glued to the computer, certainly with the way that I do it. Again, just calling back to that production line trading process. It's for that reason that I can do all these things. I don't need to be glued to the charts all day, every day. Again, I've been trading since the 90s, been full-time for over 20 years, helping great traders like you become better traders, become world-class traders. Again, just to reinforce, I am not a Wall Street guru. I'm just a regular guy. Legal beagle disclaimer, the only thing I can give you is the benefit of my practical trading experience. You can get access to my research into what works, at least for me. And again, it should be replicatable. I can't guarantee that it will, but legally, I can't say that. You know, it's your money. Speak to a financial advisor, yada, yada, past performance, no guarantee of future performance, et cetera, et cetera. We're all adults here. We're all grown-ups. So I'm not going to belabor the very, very long-winded version of the disclaimer. Right. So I keep calling what I do as production line. It should be simple to replicate because it's a production line. Again, it's not just me saying this. As my own trading has evolved, my students tell me that it is replicatable. They're seeing their own measure of success, which is great. And just like I've helped many traders plug into a tried and tested system, some of them well-known, some of them not, many of them in my community, they're all posting their results on a regular basis. Of course, I get my own results. I post what I'm doing, usually with a broker statement. I'm often reluctant to do that, just simply because it usually attracts the wrong type of person, looking at the money as opposed to the method. But nonetheless, there's a real guy behind the scenes here, and this is what I've been doing for a long, long time. Again, it's production line trading. I'm going to keep mentioning that because it should be a production line. If you're zombieing out, staring at the charts, wondering what to do, you've not got your own production line. What we should be able to do is to find, filter, and sort the right stocks at the right moment and execute those trades with confidence, because that's what a production line does. You know, compare it to the world of business, manufacturing, building a car, building something tangible. There's a system and a process behind it. I often compare what I do to the real world of business, bricks and mortar, digital, online. It makes no difference, e-commerce, whatever the thing is, there is a systematic process to operate the business. And trading is no different. And it really baffles me as to why people think that trading is any different, because it's not. It is a business. We want to try and emulate the good, positive business practices that we see in every other successful business and replicate those for trading. So if you're stuck in your trading right now, if you feel like you're missing out on all the best trading setups, and even if you're sitting on the sidelines when you do find a good stock, then that's a problem. If that's you, big surprise today, I'm going to offer a complimentary 60-minute call right now, today, after this call today. I'm sick and tired of people saying they can't do it, they can't make it work. And, I'm very fortunate to be able to have managed my own success. And I try and give as much away as possible. But if you're serious about making it work, then I'll show you exactly how to do it. I'm going to spend 60 minutes. I'll explain all the rules to you, and you can have it with my love. There is one spot. I'm going to show you one of my most profitable patterns, one of my 6 money making blueprints, as I say. I've gone off piece there with the slides, but there's one spot. So one lucky person gets a chance to have that at 10:30 today, 10:30 Eastern. So about an hour and 20 minutes. So if you want access to that, you will need access to a microphone. It's two-way conversation. It will not be just me talking at you. I will help you get set up with the charts, the system, the process. That'll take about 60 minutes. If that's you, stay to the end. I'll show you how to get access to that. I'm experimenting with this. If there's a lot of people that are interested, this may turn into a very small exclusive group session, but nonetheless, that I'm only planning on one person. So I'll show you how to get access to that later. So stay tuned. Where I've lost my place in my slides, but nonetheless, I think that's everything. Yeah, where are we? Oh, yeah. So my favorite picture, no more zombie trading. There we go. I should have added that. We don't want to be spending hours at the desk, flicking through chart after chart like a mindless zombie. And I know that because that was me. That was me. We've all done it at some point. We've all, inched into just spending another half hour. 1 hour turns to 2 hours turns to 4. Suddenly you're just spending all day flicking through chart after chart, hoping that the next one is the one. And that's what I want to avoid. And this was one of my own issues. Like, I was trying to not do this because it's very easy to spend all day, every day, or as much as your free time allows you. And it's at the sacrifice of other things. It's at the sacrifice of life. It's at the sacrifice of spending time with loved ones, family, friends, and basically just enjoying yourself. As I mentioned earlier, I'm very fortunate to have got this system down. I give as much away on these open sessions as possible. If you want to speed up and accelerate your trading developments, then you can work more closely with me. But my time is precious. I do spend a lot of time away. For example, yesterday, all my insiders that do work with me on a more personal basis know that I unplug many times through the week. I'm not sat here hoping that you sign up to my service. I quite honestly don't mind if you do or you don't, but if you do, you can see similar experiences. Again, I spent pretty much most of yesterday deer hunting. I was up mountains seeing another 500-year-old house. And this book here was almost 600 years old. And it was one of the first, it was 500 and something years old, but it's one of the first printed books in history. It was just wonderful to see. And there was notations and annotations in this book. And again, you can't quite see it, but just by random coincidence, the house, a Lime house it was, there was a Lady Newton, which is my surname if you didn't already gather. So again, it's just a little bit of a find, but because I'm not in a hurry to go anywhere, I get to literally read the books on the shelves. But yeah, it was a wonderful place to visit if you're in the area. I know some of you are in the UK, but wonderful place to go deer stalking. We had a very fortunate outcome again yesterday. let's just bring that to the front, where we got up close and personal with deer. And if you've never experienced it, it was wonderful. So yeah, that was fantastic to see. So anyway, the point I'm getting to is, what are you going to do with your free time? Again, this finances trading has afforded me time. And these days I value that significantly more than the money. The money's great, don't get me wrong, but it allows me experiences. It allows me to give to charity. It allows me to do to other things and have these experiences. So all I'm going to pose to you is, what would you do with your time if you can just plug into a system that very simply works? So let's go and look at that system. What I do is, it's not, what's the best way of describing it? It's not revolutionary. I'm going to be honest. I'm going to lay my cards on the table. It's fucking boring. What we do should be dull. It should be disinteresting. It should be not exciting, because it's a production line. If you're looking for excitement, if you're looking to win big on a stock market lottery ticket, then this is the wrong place for you. Go to Wall Street Bets, go and YOLO and diamond hands the first thing that you see. I'm not interested in that. I want to run a business. If you want to have a repeatable, replicatable process to find, filter, and sort opportunities, then you're in the right place. But hey, what we do here is to have, very simply, a profitable business. Anyway, here's the proof. So the rules of the process, or the rules of the system are, let's put this full screen. Rules of the system is, I'm looking to use the tools, in this case, the moving averages. So I'm using a 200-period moving average, a 50-period moving average, and a 20-period moving average. The formula behind them doesn't matter. Simple, exponential, triangulated, whatever your preference is, it does not matter. The tool does not matter at all. If we were talking 5 years ago, we'll be looking at exactly the same system, but through the lens, the focal point of Bollinger Bands. There's no particular reason. There's no, one tool is not better than the other. What it does is it helps us to identify an edge, an opportunity that we can consistently replicate. So that's why I'm using these tools. It's not the tool themselves that makes it work. It's a frame of reference. So as soon as you can get past the shiny object and the one magical line on your chart to make it, forget it, it doesn't work. So I'm using 3 moving average. So what I'm trying to do is, I'm trying to find those times where price is above the moving averages, all of them. I refer to this as a phase 3 trend. I'm just highlighting the ones that didn't quite work out. I'm looking for a phase 3 trend. So that's when price is above all 3 moving averages. And the algorithm that I've got will quite literally, if you just plug those rules in, basically go long above all 3 moving averages, long above all 3 moving averages, long above all 3 moving averages, go to cash, or you'll get stopped out below. So long above, long above, long above, and short below. You can see that there's some losing trades. Now, if you just do that in an uptrend, buy the dip in an uptrend, then you're going to make some money. Here's the proof. We can plug those rules into an algorithm. So that's all a rule is. That's all algorithm is. It's a quantifiable decision. If this, then that. Now, obviously, this is a simplified version of what I'm doing, but it just illustrates the point. If you do that, then you're going to be on the right side of the market. So this is the S&P 500. I'm using continuous futures contract to give me a 20-year back-tested validation. So you don't have to take my word for it. It's not a magical system. The data says that this is a positive expectancy, and this is what it looks like. It is a steady equity curve. So what I want to do as a trader is I want to try and emulate that performance. I'm not going to get it exactly every trade because of slippage, commissions. There's going to be a little bit of variance. Again, in the real world of trading, there's a little bit of difference from back-tested to real results. What I do know for the last 20 plus years is that you can emulate something comparable, and if not, make it better, because we can avoid a few things with a few extra common sense additions to the same algorithm that just can't be quite quantified I'm just not smart. The only reason why it's not included is I'm not smart enough to describe it to the programmer. I'm working on the next part where I can quantify that. So that's just getting my own thing. But this strategy at its most basic, it should make money. So, okay, great. So if I just did that on the S&P 500, then I should be able to emulate some type of comparable performance. And if you miss the occasional trade, it shouldn't be detrimental to the overall thing. Now, the trap that we don't want to fall into as traders is to cherry pick opportunities. So just because I'm looking at this chart and I can say, okay, well, this is a good chart to trade or an instrument to trade, S&P 500 futures, then if I use this strategy on this index, then I should on average make money. Now, the trap that most traders fall into, nearly everyone at some point does this, is they try to get selective with which trades that they take. Now, I've been talking about this for years. So for anyone who's been following me for any length of time will know what I'm about to say next. It's not the one trade, the next trade that's going to make you the money. It's following a system consistently on a small number or even one instrument that will make you make your business of trading successful. So it's not the strategy, it's not the market, it's the consistency of using both those things together. So when you take a strategy that has a positive expectancy and you match it with a list or even just one instrument, in this case, the S&P 500 futures, and just trade every setup with as much consistency as possible, then we get to emulate the performance. The mistake that most traders, and here's what most traders do, they will, where are we? They will, I'm just looking for a different color. There we go. They'll watch this trade here, number one. They'll watch that and go, yes, it works. And then they'll watch the next one, and yes, it works. Then they'll watch the next one. Yes, it works. They'll watch the next one. You see where we're going with this? And yes, it works. Oh my God, I have so much confidence. I'll take the next one. Maybe I'll just watch the next one. Number 5, can't even count. They'll watch the next one. They go, yes, it's working. Oh my God, this is an amazing system. And guess which one they'll trade? We've all done this. I've done this. But guess which one they're going to trade? They're going to trade this one here. That's the one that they trade. And then they think this is bullshit. It's a scam. The broker's out to get me. The stock market's a crock of shit. That's the one that they trade. And then they'll watch the next one and go, yeah, that made money. And then they'll take the next one. And that's the one that loses the money because they watch winning phases. Most novice traders, due to lack of confidence, will watch a winning phase and trade the losing phase. And it's sad to see. Now, how do we overcome that? Is we can use the power of computing. And again, one reason why is they didn't have the ability to back test their trade idea. They weren't able to say, is this a good chart to trade for the system, the strategy? You've got a strategy. I'm presuming you've all got one or access to one, or maybe you're trying to emulate what I'm doing. But we've got a strategy that works. How do we know it works? That's the big question on most people's minds. They presume it works. The textbook said that it works, but is this the right charts for this strategy? And that's often why there's a lack of confidence. Well, now we can say, yes, over the last 20 years, this has a positive expectancy. Now, will the next trade be profitable? I don't know. I honestly don't know. I'm never going to blow wind in anyone's sails to say that it will be, because I don't know as much as the next person. What I do know is that on average, I should be able to make something out of this market. Great. So it's about matching the strategy and having the ability to backtest it so that we can place the next trade. And if that one gets stopped out, then to have small enough position size to be able to trade the next trade. And if that gets stopped out, is to be trading small enough position size so that though that drawdown phase, let me just go to that drawdown phase, a little bit of the kickback in the strategy, that drawdown phase in every strategy can be weathered, so that you can get the next one and the next one and the next one, so that you can get that consistency of positive expectancy on average. And guess what? Just like any other business, because this is how every business works. They're not looking, shoe shop on the high streets. You are not looking for one customer to come into your store and buy every shoe on the shelf. Everything. I'll have one of everything in every color, please. Really? That's your business plan? Come on. You would laugh at someone if they said that in the real world of business. Trading's no different. So why do we have that expectation that the next one's going to be the one, I'm going to be a millionaire? It's a lottery ticket mentality. Does everyone get this, folks? I may be pushing a few buttons, and I'm on a bit of a soapbox this week, and the coffee's just kicked in. But let me know where you're at. Does this, Adrian, Val, Glenn, Ian, Jeffrey, does this resonate? Rodrigo, Steve, does this resonate? Because until you get this, nothing will work for you. Nothing. It doesn't matter whether it's my strategy, someone else's strategy, doesn't matter if it's day trading, swing trading, investing. Nothing will work until you get this concept. Nothing. Perfect. Awesome. Thank you very much for your feedback, folks. So what's the next thing that we can do? We've got a strategy. You've got the strategy. Average prices across 200, 50, 20. Those three are stacked on top of each other. When then price goes above all three, go long. That's it. That's all you got to do. Go long. When price goes below it, or back between the moving averages, that gives you your Bible dip. So let's look at that next. Let's just use the, just for simplicity, let's just use the 50-period moving. So every time price comes between the moving averages, the next part is, okay, what point do we get in? So there's the average price. There's the 200. I'm just going to focus on the 200 and the 50 just for the moment. So just because we're in an uptrend and price is above our averages doesn't mean that it's an automatic buy. We want to buy the dip in an uptrend, not the rally. No one buys rallies in an uptrend unless you want to lose money. You can get away with it from time to time, but the reality is it's not consistent. That would be buying lottery tickets. So a buyable dip is when price comes back between, and again, just in this case, back to the 50-period moving average. Cool. That's the point where you're going to sit up and pay attention. So that means that you're not buying every up day or down day or chasing and hoping and all the other weird stuff ending in ing. But it also means that you can avoid this bullshit that's going on right here. Because this is killing and crucifying a lot of people. Again, just presuming that you're only trading this one instrument. We're only looking at the S&P. But it's going to help you avoid that. Because when price goes below, okay, we've got a Bible dip. Great. And we spoke about it at the time. For anyone who's been following me for any length of time, we said, hey, look, great, we've got a new Bible dip on the market. This is a good opportunity. We've got a deep retracement. It's not gone back above the 50-period moving average. There's no dip to buy. We're looking for Bible dips, not simply a downward movement in the markets. It's a downward movement in the context of a trend that we're looking for. Again, let's put some specificity. So we know what Bible dips look like. I've just highlighted this. It helps us stay on the sidelines when actually this is not behaving in a way that's favorable for my strategy. Cool. Let's just sit on the sidelines. And this is another thing that is potentially difficult for a lot of newer traders. It's the waiting. Waiting is one of the hardest parts about this process, is waiting for the opportunity. I've sometimes compared to what we do in the trading world as farming. We want to be farmers. We've got a universe of stocks, the seeds that could potentially yield a profit. And we need to wait for the right season, the sun to shine, a little bit of rain every now and again, not too much rain, not too little, the Goldilocks amount, sunshine, good weather, and our crop can grow. So right now, it's nighttime, it's winter, it's planting season, however you want to phrase it to keep in line with the metaphor. So what we're waiting for is the optimal moment, the Bible dip in an uptrend. So when price goes back above our combination of moving averages, then we can start to resume the buying program. So on the S&P 500, right now it's saying, you know what, it's not an optimal condition to be in the market. Go to cash. That's okay. There's plenty of other things for us to trade. You know, we don't have to just trade the S&P futures. But it does mean that for most of this year, so there's 2020. So for most of this year, you'll be in cash. And that's difficult for a lot of people. Another way of reframing this, I like reframing. There's 3 trades you can place. You can go long, you can go short, you can be bullish or bearish, but you can be flat. It's just that's just the posh way of saying you're holding cash. So on the S&P 500, you should be in cash. Not necessarily in everything should be in cash. You know, I believe that you should have a portfolio approach. We're going to look at that next. But it allows us to, you know, this is not the right instrument for us to be involved in at the moment. So let's go to cash. So the third trade you can place is waiting, cash, neutral, flat, all different words to describe the same thing. Because again, we can be bullish, we can be bearish, long, short, or we can be, you know what, neutral. It's not the right time to be involved. And as soon as you, again, if you can get your head around that third way to trade, then it's going to be a better experience for you. Let me pause there. Does that make sense? So I'm laying it all out today. Things that have contributed to my success as a trader. The ability to sit on my hands and wait, as difficult as it may be, is just as important as being in a trade or not, as the case may be. Any questions here about these concepts that we've just been spoken about? Is this resonating? Where are you at, folks? If you're new, pop a question. Give me a little thumbs up. Let me know you're still involved. Let me know you're there. Cool, cool, cool. Right. So the next part to consider is a portfolio approach. You don't have to have a big portfolio. So we want to, again, let's come back to, we've got a strategy. We've got a strategy. It's got a positive expectancy. That's a fancy way of saying that on average, it makes money. Cool. If I just did that, nothing else, I should be able to replicate. Again, I can't guarantee that you will to anyone legally. I can't. But I know that if you follow the process that we've mentioned, you should be able to emulate something comparable. So the next part about it is thinking about a portfolio approach. Now, it doesn't have to be a huge portfolio, but you should have a portfolio. And it should be big enough for you to handle. Big enough for you to handle. What's that mean? You don't have to trade every stock every day all of the time. You hear me say it. You don't have to look at the thousands of stocks that are out there. All you need to be consistently successful is at least one. And you can have a one instrument portfolio. You can just trade, for example, the S&P 500. And equally, you can just trade Apple. Let's take a look at Apple. So why would Apple be interesting for you? Because firstly, it's got a positive expectancy. So should you trade Apple as a part of your regular trading routine with the strategy that I've just mentioned? Yeah. Not my view. It's not my opinion. It's like, you know what? If I wanted to look at one thing, trade Apple. Why? Because it's got a positive expectancy. It's got an exceptional performance for the way that I like to trade. Will the next trade make you money? Well, in fairness, there's the last trade and it's not made me money. I'm currently sitting on the sidelines with it. It's kicked me into the shins, as I like to say from time to time. So will the next one work? I don't know. I honestly don't know. The last one didn't. Doesn't mean that the next one will. All I know is that on average, if I place the setups as I've described with the frequency that they set up, so if 3 trades on Apple set up this month, then you place 3 trades. If one of them sets up, then 1 trade. If none set up, then you don't place anything on Apple. You've got to trade with consistency of the frequency that they set up. That will give you the consistency so that you can emulate something comparable. Does that make sense? So you can have a portfolio of 1. Again, I would urge people to think about 5 stocks, 5 instruments. And if you've got a small account, a large account, wherever you are, there's going to be a tipping point. Some people are happy to have a number of positions on. Some people practically can't have a large number of positions on. That's fine, because everyone's at different levels of their trading career. So one of the things that you want to consider is when you take the strategy and you apply it to a list of stocks. Okay, we know that this stock is great for this strategy, and this strategy is great for this stock, vice versa. It works both ways. So the next one thing you want to consider is, are you able to trade? If you have 5 stocks in your universe, no, let alone the portfolio, if you've got 5 stocks in your portfolio, where's my drawing widgets? There we go. If you've got 5 stocks in your universe, your watch list, these 5 stocks, whatever they are, Apple's one of them, S&P is one of them. Take one of these if you want. So are you able to place all 5 trades if you have all 5 set up? So are you able to get 5 out of 5 if 5 trades were to set up? And there might be a few reasons why you don't. It could be that you've got a small account, you've got a large account. There's a why in the day. Your ability to place the trade is not there. What I'm trying to get to is, if 5 trades set up, can you practically place 5 trades? Does your work schedule allow you to trade this? Again, we're on daily charts, so you can do this outside of regular office hours. So the thing that would probably prevent each and every one of you from potentially emulating this performance is what? Your personal capacity to place the trade. So one of the things that most people will never do, it's again, practically, you can have a large account and maybe you can trade 50 stocks. That's cool. But is your emotional or mental capacity there yet? Can you practically place all 50 trades if all 50 trades set up? Again, practically, you may have a large account and you can do it. But emotionally, are you there yet? So there's an element, an intangible element, that would potentially prevent you from emulating the performance. So you can have too much. So again, think about it in context right now. You've got my strategy. What's preventing you from doing it? Well, you're trying to look at every stock every day. You're trying to apply it to every setup on every known stock in the stock market. And how many stocks are there? There's 25,000 stocks in the US markets, something ridiculous. And it's impractical to try and trade or look for the same setups on all the stocks. So we want to take the strategy and filter it through half a dozen, 2 dozen, however many that's practical, stocks on your watch list. So for example, my watch list here on the left is about 89 stocks. That's all I'm trading at the moment. That's my universe. That's my world. That's my world of opportunity. Now, I'm not trading all 89 stocks, but that's what's in my universe. And potentially anywhere up to about 50% of the list of stocks that you have available to trade is going to set up. So I've just got, that's something I've observed over the years. So I've got the potential to have around 40 trades on at the moment with this process. And that gives me plenty of money. It gives me plenty of free time. It's that balance point between, it's not overwhelming for me to apply the strategy. It's not overwhelming for me to monitor the stocks. And neither is it overwhelming for me to monitor my open positions. Is this concept ringing true? Is everyone happy with this thought process? So I'm looking at a small number of opportunities with a proven strategy that behave favorably for that strategy. Again, if you don't have the fancy tools and software like what I've got, there's plenty of free tools out there. You can go to TradingView, you can go to TrendSpider, you can go to TC2000s. They've all got the ability to scan strategy results. At the low end, there's some great tools that will allow you to do if this, then that type of operations, so that you can validate, is your trading idea profitable? And if it is it profitable on a group of stocks that have a historical tendency In my case, to swing. I'm a swing trader. I want to get paid at the end of the month, usually between 30 and 45 days. That's how I want to get paid with my business of trading. So I'm looking for stocks that swing favorably and have done historically. So for example, UCTT, Ultra Clean Holdings. Here's a stock that I'm looking at right now. This stock behaves favorably historically since 2004. Great. So will the next trade make money? I don't know. All I know is that on average, over a long period of time, that it has a positive expense. So this stock has consistently behaved favorably for the way that I want to trade. So I can include it in my universe of stocks. Great. So now I've got 2 stocks in my universe. I've got Apple. I've got 3. I've got Apple. I've got this. And I've got the S&P 500. So there's 3 instruments that you can trade. Cool. Let's take a look at Halliburton. Let's take a look at LNG. Again, just some of the stocks that are in my universe. We've already covered these. Again, we've been trading Halliburton for a long period of time. But why is Halliburton in my universe? Well, a little bit of a rough patch at the 99. I can actually get the date on this. A little bit of a rough patch all the way up till about 2009. So 2010, it's when it really accelerated. So something changed. Maybe it was fundamental. Maybe it was new management. Maybe, I don't know. I honestly don't care. But for at least 10 years, it's been behaving favorably for my style of trading that will pay me between 30 and 45 days. Great. Will the next trade work out? I don't know. I honestly don't know. But if I take the next one, the next trade, and the next trade, and the next trade, and the next trade, I should be able to emulate this performance. And all I'm trying to figure out is for the next 6 to 8 or 12 months, when I reevaluate my list of stocks, I'm in the process of doing this right now. It's the only time I will spend a little bit of time flicking through chart after chart, because I'm trying to run my algo through a large list of stocks that have been pre-qualified. They have options, they're liquid, blah, blah, blah. We've covered that before in the past. So if I place the next trade, the next trade, the next trade, the next 10 trades, the next 20 trades over the next 3, 6, 9 months until next year, when I reevaluate again, I should be able to see something similar. I don't know if the next 12 months is going to work out. No one does. But the data suggests that it probably will. Great. So now that I know that, we've got 4 stocks that are in the universe. S&P, Apple, CC, the Ultra, I can't even say the ticker, Ultra Clean Holdings. So if I take those 4 stocks and take the next trade, 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 I should be able to emulate the same performance across all of them, so that I have a portfolio. Now, occasionally, one of those is not going to work. Occasionally, one of those is going to be a break-even trade. But what should happen is, and what I know for myself, is about 68% of the time, I should be right, because that's my own data. That's my results telling me that if I do this for the next 12 months and follow the trading on 4 stocks, then I should be able to win around 68% of the time. And that's been pretty stable for about 20 years. So again, I'm just giving you so that's not back-tested performance. That is my actual results. So I know that portfolio trading works. So it's not just one tick. It's not just one tool, one widget, one whiz-bang, one tip, hack, crack, whatever. The latest shiny thing that you're looking at is there's several things that go into making the business of trading work. And these are some of the big headline things that are going to contribute to your success. Is everyone kind of getting what I'm trying to say here? We're more at the philosophical level with trading, but this is the principles that make trading work, or these are the principles that make trading work. You want the pancakes, Glenn. I know. You're not getting my pancake recipe. Exactly, Steve. You need a plan. Not only need a plan, you need to execute that plan. And not only do you need to execute the plan, you need to execute it with consistency. And not only do you need to execute the plan that is proven with consistency, you need to apply on a list of, or a basket of opportunities that also behave favorably for the way that you want to trade. Absolutely. Recipe. I was actually going to food next. It'd be like trying to sell vegan foods to avid carnivores or beef burgers to vegetarians, it's not going to work. It's not a product that is favorable for that group of people. It's the same principles that we're talking about. Absolutely, again, yeah. Casinos take 51%. We spoke about the casino edge last week. It's that principle that we're talking about again. It's not the fact that they're 51% of the time the game roulette, for example, gives them an edge. It's the ability to trade that edge consistently, because they don't know when the big payout cycle is going to be good for them. But the casino is playing every game. So they've got the long-term consistent application from a game that gives them a very minor edge. We've got a proven edge that's reasonably, I would say this is reasonably profitable. I'm playing it down, as you can imagine, but this is how we operate the business of trading. Right, folks, what stocks are you looking at today? Let's run some back tests. What stocks are you looking at? Let's validate your trade choices today. What are you looking at? What are you looking at? New to my watch list is DECK, D-E-C-K. I don't know why I'd overlooked it in the past, but look at this. Look how steady the equity curve is. That is a favorable stock for my style of trading. I don't know why I wasn't trading it previously. For some reason, I had excluded it from my regular universe. But when I was doing some research yesterday, the first thing that I did was put it in my universe. It's not ready to trade today. It's not an automatic get in the trade, but it's pretty difficult to ignore. DVN, let's take a look at it. So Al's asking about DVN. Is this Devon Energy? I think it is, isn't it? Devon Energy. My apologies, DVN. I'm pressing all the wrong buttons here. DVN. There we go. Oh, I pressed it wrong. It's a little bit of a snafu there. DVN, Devon Energy. So you tell me. The energy sector is quite literally, let me just move that over here. The energy sector is amazing at the moment. And arguably, all of last year, Devon Energy was amazing. Yeah. Steve said it. Steve's popped a comment. Chasing it. Yeah, it's cycle. It's inconsistent is what we're looking at there. So since 1999, which is when the data that this goes back to, there's pockets of profits and pockets of pain. It's not consistently all gravy. Now, it has been profitable for about the last 20 trades, for about 2 years. You could put an argument together, but let's face it, there's better things to trade. Yeah, UCT, it is on the left, right there. UCTT, Rodrigo, UCTT. Right at the top there. So UCTT, so this is new on the list. So it's historically behaves in a way that is favorable for my style of trading. Great. Steady equity curve. If we're looking at the equity curve here on the left, it is effectively a trending chart. The dips are small, the rallies are big. The dips are small, the rallies are big. That's a steady equity curve. So yeah, it's great. Now that we're looking at this, we can possibly say it's not trending at the moment. This looks like a great range reversal candidate, just a little bit of, one of our other money-making patterns. Don't know if you saw what I'm doing there. I'm just recognizing that price is range bound. I'm not really worried about the pennies. I'm just saying the range low is about $40. The range high is about 60. That's the line of best fits. So two choices, reversal off the range low or wait for the breakout either through the highs or through the lows. It depends on whether you like trading ranges or you just want to wait for the trends. This algo is only looking for trends and it's ignoring any visual inspection. Now, this is that element where the, what's the phrase I'm looking for? The manual override. Okay, now I'm looking at this chart. I can see that we've got price going sideways. Okay, great. I'm just going to do a little bit of a temporary override to say, this trend is going sideways. It's not favorable for the strategy. So I can just wait for a breakout. There's other things that I can do. I've got 4 other money-making patterns that I can trade. It's not just about the trending one, but there we go. So what else we got? What else have we got? What do you want to look at? So we've looked at UNG. Sorry, Glenn, I'm just scrolling back. Everyone's popping a ticker in the chat. So we looked at DVN. Let's just go back to that one for a second. So should we trade DVN? I think everyone's under the same conclusion that it's not historically favorable. It doesn't mean that you can't make money. This is a good example of the strategy would work, but I didn't know that it could work consistently on this stock. So I'm going to trade something else. I'm not going to worry about this one. I'm okay with not getting that because the data suggests that it's not necessarily an anomaly, but it's not something consistent. Why is this important? Because I want to take every trade without deviation, without hesitation, so that I can get the repetition, so that I can emulate the consistency. There's no consistency to emulate. So leave it alone. Let's take a look at Costco is next up. C-O-S-T, Costco. What do you think? Let's throw it out there. Good, bad, indifference. Just typing some of the tickers that everyone's posting so that I can go through them quite quickly. Yeah, so again, if you just ignore the dollar amount, I mean, it's not making net a huge amount of dollars. Again, we weren't trading it from 2004 to 2010, but for the last 10 years, this has been great. The last 11 years, this has been great. It's reasonably steady. So I tend to look here, and we can drill down to the specifics. And now that we're looking at the breakdown, you might only want to trade this on the long side. But, you know, just basically, yeah, it looks like it's been making money. Looks like it's been making money. Yeah, it's fine. Looks great. Been some great setups on this. So, good stock. Should you include it in your universe? Yeah, it looks great. Again, if you want to look at the breakdown, this might be something to only trade on the long side. The short trades look to be net negative. So don't worry about trading short. Only be bullish on this. And that will steepen that equity curve up even more. Or that's the theory anyway, because you're excluding what is a very definitively inconsistent losing part of the strategy because it's on the short side. It's not making money. Let's take a look at BYD. This is actually in my universe of stocks. You'll see why in a moment. So I know it's an automatic yes. It's got a nice steady X curve. I've not got a huge amount of data, but nonetheless, it's going back 20 years. It's reasonably steady. I traded it reasonably well, so it looks like a great candidate to trade. I've no reason not to trade this, again, so that I can place the next setup, so that I can get the consistency, so that I can emulate what we see here. TSN, again, another stock I've had some great fun with. I've traded this quite a lot. Again, generally a positive equity incline. Reasonably good. I've got multiple strategies. I've actually got better strategies for Tyson, but with the way that I've explained, this is a great candidate for the style of trading. Don't see any reason not to trade it. It's net positive. So let's trade it. Marvel, M-R-V-L, Marvel Tech. To be fair, throw the question open again. What do you think? Is it worth including in your universe of your watch lists? Is it worth you trading? You tell me. ODFL, Crocs. Yeah, it looks good. Absolutely good. Steady equity curve, a little bit of a rough patch here. That's probably a consolidation. Again, just because I know how the system works, obviously I'm a product of my own system. That's just one of those nuances you'll pick up over time. So I know that something like that could possibly ironed out just by visually recognizing that the trend is not trending, it's ranging, and that's one of those manual overrides that we can look at when we work together. But yeah, it looks like it's a great candidate. It's exceptional candidates. So yeah, it's definitely worth including. Let's take a look at M. This is Macy's. So what do you think? Could go either way with this one. What do you think? Goes back 20 years. The equity incline goes back to 2016, 17. I would say speculative. I've not got a multi-decade favorable behavior, but something changed in 2016. It started to behave favorably. So what I would do here is I would call this speculative, and it's okay to trade a speculative. I'm calling this speculative because I've not got enough data to say I can take every trade, I can close my eyes and place every trade without thinking about it. Historically, it's not suggesting that. That's why I'm looking at this. I want to be able to close my eyes and place every trade without deviation, without hesitation. It gives me confidence because on average, it's a stock that behaves favorably. Yes, it has temporarily, but you know what? We found better things to trade, haven't we? We found better things to trade. It's not no, it's just I may think twice about it. And that's what I don't want to do. I don't want to think twice about trade. So UNG, natural gas, looks great. Positive expectancy, happy days, steady equity curve, go for it. ODFL, so this is Old Dominion Freight Line. Wow, look at that. Look at that. Little bit of a ropey start from 2010 onwards. So 12 years. Lovely, steady equity curve. Wonderful. So let's throw a question out there. Let's throw a little bit of a quiz. ODFL. That's this stock. So ODFL or Macy's. Let's go back and forth between the two. So Macy's, which looked like this, kind of scrappy. Last 12 months, last 2 years has been great. Or would you rather place trades consistently and methodically using the production line process on ODFL? Which one, ODFL or Macy's? Which is, if you had guns to the head time, you had to choose one. You can only trade one thing. What's not going to keep you up at night stressing? Yeah, absolutely. That's why I'm doing this. I don't know if this stock is ever going to make me money. I honestly have not got a clue if the next trade will work. What I do know is I'm not going to lose any sleep over ODFL. I'm not going to be stressed whether this is the one that's going to kick me in the shins. I'm not going to bat an eyelid if it stops me out, because I'm just trying to get all I know is that if I place the trades with consistency as they set up, then I should be able to emulate that performance. Great. But I can't say the same thing for Macy's. It's not that it's a bad company. Maybe it is, I don't know. It's not that it's a bad company. It's not that the management are crap. It's just that the stock movement doesn't consistently behave in a way that's favorable for my style of trading. I want to get paid at the end of a 30 to 45 day window. I want to have plenty of free time. I don't want to stress about the trade. I want to put the trade on. I want to walk away. I want to be halfway up a mountain every Thursday, which is what I like to do. On Tuesdays, I like going a local town, going to get a glass of wine with the wife and, just chase local music bands all around the town today. That's what I want to do in the week. I don't want to stress about, is this stock going to piss me off? Am I going to lose sleep over? No, that's why we're doing this. This is what gives me confidence to place the trade. Last one, Crocs. Crocs. Who suggested this one? Who suggested Crocs? Love them or hate them? Al, one for you, my friend. One for you. Crocs, C-R-O-X. What do you think? Worth trading? Worth considering? Worth placing the next trade without thinking about it? Got positive from 2016. Again, it looks good. The data suggests we've got multi-year performance. Again, if you were looking at it, if you're interested in trade, you're hard pressed not to place a trade on it. But if you're going to include it in your universe, you need to place this trade, the next trade, the one after. You can't cherry pick. I don't know which ones are going to work and which ones aren't. We can look at the details. Actually, now we're looking at it, maybe we can just ignore all the short trades. Short trades don't look great. Cool. Long trades look amazing. Generally, looks like it's worth considering. Is everyone happy with this? Does everyone get why having a rule-based system is important? Having the ability to check if a stock behaves favorably for your style of trading, or my style of trading in this case. It's favorable for swing trading. EXR. We'll do one more. Perry's looking at EXR. EXR. One more. Got to be the last one. Look at that. Look at that extra space storage. I think I was looking at this about an hour before we started our session, because I remember looking at some storage and utility type stocks. But I like that. That looks great. How can I be confident? Great. I'm reevaluating my stock universe. This would be something that I would include. I want to consistently trade this stock. It's got a lovely steady equity curve. The drawdowns are small. The rallies on the equity are great. It's got almost 1 million shares traded on average. The only thing I'll need to check, I'm guessing it is because Perry, we trade in a similar way. And Perry's one of my insiders. And I just need to check that it's got stock options, because I like to trade with stock options as an alternative to trading stock. Just another way that I can steepen this equity curve. That looks great. You know what? I think I'm just gonna pop it on there. I'm just gonna pop it there. EXR. That looks good. I like me some EXR. There we go. I like that. I think you're overthinking it, but yeah, I know what you're saying. It'd be nice to add stuff like that. I've done it. It's not adding anything that you can't already see. A lot of these are poor. It's not good or bad trading periods. You can make this steeper just by changing stop loss size. You can manipulate the data. So I'm not so focused on that type of analysis, because we can manipulate the steepness of this just by changing the stop loss. The way that I've got it set is it's going to be comparable to how I like to trade, because we can make some of those crappy stocks that we looked at with different targets, with different stop losses, different inputs into those variable elements. We can steepen the equity curve, but the trade-off is going to be, I'm now committed to sitting in front of the computer for longer than I want to. And remember, Tuesdays, date nights with the wife, I like to go band chasing. Thursdays, I like to be up a mountain or flamingo chasing. The rest of the time, I like to do other things. So that's the trade-off. You know, you're going to be more time. Again, that's the thing that we're trying to move away from, is looking at every chart every day, all of the time, trying to, well, do what? Procrastinate by looking at thousands of charts. So finally, you've got a system. You've got a systematic approach to find, filter, and sort stocks. When price is above all three moving averages, the 200, the 50, 200, 50, 20, go long. Great. That's the system. Nothing fancy, nothing complicated. We've just proven multiple times. It doesn't work every time, but when it does, it works amazing. When it doesn't work, it's going to lose small. When it works, it's going to win big. Great. That's all we want to know. That's what a positive expectancy strategy is. On average, it makes more money than it loses, just like any other successful business in the goddamn world. Every business works this way. Trading should be the same. We've got a strategy that works. We then want to match that with a group of stocks that behave favorably for the way that we want to trade. I'm not trading penny stocks. I'm not trading stocks without options. I want liquid stocks that behave and swing in that 30 to 45 day profit cycle that I was just mentioning. Great. That's what I'm looking for. You match those two things together, you've got a winning strategy. The only variable then that is an individual thing is how many opportunities do you look at? Because you're going to have plenty to trade. So why don't you just trade the best? Why don't you just look at the top 25 stocks and nothing but the top 25 stocks as per the strategy, the historical performance? That gives me a lot of confidence to sleep at. That allows me to go up a mountain. That allows me to go hiking. It allows me to go flamingo spotting. It allows me to go and do all the things that I want to do that don't involve me being sat in front of a computer, hoping that this trade's going to work out. I trade a portfolio. I trade the long side. I trade the short side as well. So I don't care about current events. I'm not looking at news. I'm not looking out the window to see what Cramer is talking about. I'm not doing any of that. The bullish trade should make money. The bearish trade should make money. It doesn't matter what the market conditions are. There should be, on average, a profit, just like any other business. Good place to wrap it up, folks. See, there's a few names that have popped in and out while we've been doing this. At the beginning, I promised that if you stuck to the end, if you're stuck in your trading right now, if you're feeling like you're missing out on all the best setups, well, are you missing out on them right now? You know, I've gone through what I do and how I do it. If you find that you're still sitting on the sidelines, even when you find a good looking stock, you just wave it goodbye as it sells off to targets. If that's you, in 25 minutes from now, I'm going to select someone who will do a one-on-one. It's going to be first come, first served. Going to get you set up with the best tools. If you're not using any software right now, there's free software that we can use in the interim. I'm going to give you the right stocks to follow. I'll show you I've already showed you each and every one of you. You're not missing out. But if you want me to personally show you the extra details, the specifics, I'm feeling very generous today. I want to give one person, one lucky, committed trader, my most profitable trading pattern. It's part of the overall system, and I'll show you the entries, the exits, the stops and targets, the specific details that I just don't have time to today because it's an open house, it's a group session. You've got everything that you need to make it work. You've got a list of stocks that it works on. There's only one spot. There is only one spot. It's practically, there is only one spot. I may do this again in the future. I just want to experiment. I just want to test it out. But at the same time, my time is limited, as you can appreciate. So I will be starting this in 25 minutes. I'm going to take a break. You can hit reply on any of the emails that I have sent you, and that will come to phil@antivestor.com. So if you send an email to phil@antivestor.com, I'm going to post it in the chat. So phil@antivestor.com. You send me a message and you can do what Glenn said, me. Glenn, the software is built in. If you've got a charting software, just put the 3 moving averages on. There's no software that I'm actually giving you. I don't own the software. But if you're already using a charting software, you can certainly use any of the free charting software. I'll just show you how to set it up on whatever your preferences is all I meant by the early comments. So apologies for the confusion. So send me an email, phil@antivestor.com. We're going to start in 25 minutes. I will pick someone at random. If there's several of you, I may do a group session. So I may do a group session. It depends on how many, because I want to make sure that we get everyone set up. So if you're interested, send me a message. I will send you a Zoom link and we will start at 25 past. If you're in my accelerator group already, please, we will do these on our private sessions. You're not missing anything, but I just want to help. Just want to try and give something back. Based off some of last week's comments, was asked how long it takes to pick up the system. How long would it take to learn the system? Like learning golf was the metaphor that we used last week. Like learning golf, I can give you the rules. It takes probably about 45 minutes to actually learn the rule-based system. But just like learning golf, it doesn't necessarily mean that you'll be an automatic expert just because you know the rules. However, I will help you get set up. You will know what I'm doing. You'll be able to apply what I'm doing on a list of stocks. I'll give you the best stocks, a top 10, a top 15, whatever makes sense for you. And we'll get you up and running. There's no reason for you not to make this work. So if that's you, send me an email. We're going to get started in 20 minutes. I'm going to sign off right now so I can take a quick break, grab a cuppa. We'll see you at the bottom of the hour. Before I go, while you've got me, any final questions? Is anybody stuck with anything that needs some attention? Now's the time to get the most out of these sessions. Awesome, Zeke. Thank you very much. Randall, thank you very much. Zeke, I know I'm the man. Lots of energy today. It came from frustrated anger, Steve. So if you'd like to be included, or send me a message, phil@antivestor.com. You can hit reply on any of the emails that you receive from me, and I will do a complimentary, no catches, no pitch, no bullshits, straight into the specific details, including the bits that I just don't talk about on these open sessions. As you can appreciate, it's an open session. We've got very limited time. But I will get you all set up and running. Again, if there's several people, I may do a group session, but I don't really want to do that. You will need a mic. So if you've not got a mic, don't hit reply. You will need to be open to sharing your screen, because we're going to be doing work on your computer. I don't need to talk through it on mine. I know what I'm doing. It's more about you. So it's going to be an actual coaching session, not me talking at you for 45 minutes. We intend to workshop you to get up and running and emulate what I'm doing. So if you're interested, last call, phil@antivestor.com, and I will see you in 20 minutes. Fabulous. If I did miss one of your questions, again, I'm not going to check now. There's lots of chat in the comments. If I did miss one of your questions, best way to get in touch with me if you're not going to be attending or not planning on applying for the session later, you can come to my Slack community. You can direct message me. Most people do there. That's one of the fastest ways to get in touch with me. Everyone pops a question there. There's already some Ask Me Anything questions there. But that's the fastest way to get in touch with me. Push it straight to my mobile phone. I'm usually very responsive, as I am with email. So if you need me, you know where I am. If you've got a question, you know where to go. Can existing members attend? It's probably not worth it, Randall, because it's going to be just not relevant. If you want the same thing, we've got our own private sessions. So if you've got questions, you've got comments, if you want some extra attention there, I'm just experimenting with this just to help the people who are, it's probably maybe some of the people at the new end of the spectrum just get the right foot on the rung of the ladder. So yeah, you already get a lot of my time and attention. So again, I'm just experimenting with this just to try and help some people who just maybe hitting a hurdle, that's just preventing them from taking the next step. If you want my time, Randall, again, we've got it inside the community group already. And if you are stuck with something, just shoot me a message. I'm always open to helping out beyond what my promises to each and every one of you, as you know. So if you are stuck with something and you don't want to bring it up in the group session, just send me a message. Cool. Right. Last call. It's gone. I'm going to press stop. I'm going to press the stop record button first of all. Where are we?